Welcome to Momentum Monday. Today is April 21st, 2024. Howard, did you celebrate 420?
Yes, I did, and as you can see, I've got a green hat. And that's what I do to celebrate it. We had our big golf grass league tournament this weekend. It was really fun, Ivan. And I'm just recovering from that. Let's you catch everybody up. I've been traveling, everybody. Sorry, I missed the last Momentum Mondays. But as you can see, just Ivan's probably been warning you about the breakdown, so it should be no surprise to people that watch your show. So catch us up.
Yeah, I mean, the market leaders finally really broke down last week. I mean, there have been some signs of weakening leadership, weakening price action, but last week really, everything dropped. And to me personally, the reason it's not interest rates or worries about growth or recession. It's the escalation of the Middle East conflict, and we saw that in the futures market on Thursday when they started selling off. But even before that, everything started last Friday, obviously. And anytime there is a possibility of a global war, any money manager in the world is just in a risk-off mode, and it's completely normal to see reducing exposure in some of the tech leaders that they've appreciated significantly over the past few months or few years even. So we saw just a normal really rotation out of high beta, high growth names into lower beta, more traditional, more names from the traditional economy, like financials and consumer staples, which the price action there is not really super bullish. Don't get me wrong, but last week they held a little bit better than tech stocks, which were completely obliterated. And as you can see here, even XLF financials, XLP consumer staples, yes, they bounce, but they're below their declining 50, 20 days. So that's probably a shorting opportunity if this market correction continues. This is why I don't really care about the relative strengths of those names. Like, for example, Sprouts Farmers Market, setting up near its 52-week highs, even all-time highs. Typical defensive name. If I'm gonna play any upside, which I might, considering the big drop last week, of course I'm gonna go after the high growth leaders, like Nvidia, and just wait for a sign to just play an oversold bounce.
Yeah, you can see all the people shorting on valuation. They probably got worn out by the time the big drop happened. So this is where you'll see how tough this correction will be by watching the video in the SMH and Microsoft. Probably, I'm trying to think of Facebook. The stuff that's held up best. I think I've got to see this Goldman, Google. How did Google hold up?
Google?
Yeah.
Google is holding just a little bit better than the rest.
Google, Goldman Sachs, so Goldman as well. So financial gold and where's Goldman? Yeah. So I think this is probably pretty, I hate saying healthy, but that's what happens in normal correction. The market corrects, then the leaders join the correction and whoosh. And we'll just see. Listen, there's a lot of macro headwinds. The market did really well through the first 4 or 5 months of the year, and now we're back to break even-ish on the market. So the small caps are down on the year. So there's a staircase up, elevator down, or elevator up. Who knows? I forget the saying for some reason, but it's been a year of stock pickers. you've got this transition now to energy, gold, certain commodities, cocoa. There's very few ways for individual investors to trade these. They don't know the gold stocks. They don't know the energy stocks. Young people haven't looked at these ever. They don't even know how to research this stuff probably. And they keep buying tech because that's what they know. And software stocks, for example, just can't. IGV, I think that is, just can't. Where's IGV? Is that it?
Yeah, this is IGV, a weekly.
We're looking good, but just boom, right back into congestion pretty quickly.
Yeah.
So I wouldn't be surprised to see a bounce, but at the same time, I'm looking for really only a setups if I'm going to try it alongside. But I do think it's kind of a normal correction here.
What are some stocks that you would love to buy on a pullback, or at least just nibble?
I'm index directing, so if we stay down here, I like direct indexing because you get the tax loss harvesting as they rip through things. So the best time to direct index is during these corrections. So I told you I use FREC, one of our companies, FREC.com. But I would. The strongest sector has been SMH and QQQ. So QQQ drops another 5-6%. It's definitely something that I would start nibbling on. We're going back to 23 levels at that point. Same with semiconductors at 170. These things can happen really fast. You can see, let's just down 20%, 25% on the 3 times leverage.
Yeah, almost 50% from the 52-week high. Yeah.
So, listen, everybody was talking about we need a correction, then we get one. Everybody gets scared. That's normal behavior. There's still too much cultish behavior. If I look at Tesla, I go, there's nobody. Just feels like deer in a headlight. I think they've been saved so many times, and the fundamentals of Tesla are weak. The Cybertruck is really a comedy. The growth, Elon's so busy that this is a really tough global economy. You've got competition around the world. You've got costs rising. You have employees had to do a huge layoff, and people aren't scared. So I think you have to stay away from broken stories, broken companies, and you have to really kind of stick your entries to companies that you understand and what institutions are going to support. So I haven't been following too much of the market. I'm just going through my watch list. I'm sorry. So I'm just trying to think what's held up. Like I said, I think it's a story of Google, Gold, and Goldman.
Why do you like Google so much?
I like Google because they're going to win. I hate them. They're just as evil as all the others. But I think they're going to win AI. I think AI is complete, bubble in terms of enterprise value, right? I think all the enterprise value is going to the big companies, and that's already been factored in, and Google gets the least credit for AI. So I think they'll hold up the strongest in a sell-off. They're diversified. They've got YouTube. They've got email. They've got Maps. They have Android. So I think they'll hold up the best. I'm trying to look through my portfolio here. The luxury companies, not doing great. Certain software companies are holding up better than others. Just looking through what's weak. I'm sorry. Yeah, the semis really rolled over. Netflix, big. I wouldn't say it's a miss.
They reported really good numbers, Howard, and they still sold off, obviously, on Friday almost.
They sold off because they don't want to. They're becoming more of a value stock. Like they don't want to report.
Yeah.
They want to change up how they report numbers. That always scares people, and it's not cheap. But Netflix under 500, I would add to my position. Again, I'm mostly indexing, but I would add just some Netflix there. Again, but everything I like is overvalued. So I don't know, like Coinbase 200, I don't see it there. I don't want to own it there. best stocks are kind of in no man's land, and a lot of bad stocks I think are just beginning to go down. A big correction in the gambling stocks, DraftKings, Coinbase, the degenerate stocks pulled back. I don't see anything. Small cap biotech maybe, but no earnings. So again, gold. I'm watching gold, Goldman, and Google. Those are three sectors
Okay.
that and it says something about every fragment of the economy. And the question is with gold too. Bitcoin had the halving. Does Bitcoin and gold kind of diverge, or does gold rises and Bitcoin stay flat? So a lot of capital out there. Maybe the other big story is bonds. Generally, it should be bonds. I can take a look. Yeah, so rates creeping.
Yeah.
During all this, so the bear market in bonds continue.
Definitely, yeah. They've been perking up a little bit, but last week's sell-off is not about rates. And obviously, if all of a sudden the market narrative changes that the Fed maybe is not done raising rates, then we're going to see a significant correction in tech, talking 20, 30% in the QQQ. But considering that it's an election year, probably they're not going to do anything about it. They're not going to raise rates, even if inflation continues to perk up. Worst case scenario, they're going to keep them at the same level, even though the market has already priced in maybe 2 or 3 rate cuts later in the year. So this is what matters. This is really the narrative and the story in the medium term, like 6 to 12 months horizon. In a really short-term horizon, like the next week or so, obviously everyone is watching the Middle East and what will happen there. This is what's really moving the markets and causing fear right now. But if nothing happens, if things calm down, we can very easily see a quick V-shaped recovery in all of those stocks that been crushed, especially if several of them continue to report strong earnings. And next week we already have, I think we have Meta in 3 days, we have Google in 4 days, Amazon, no, not Amazon. So those two, Meta and Google, and let's see, when is Microsoft? And those three, Microsoft, Meta, and Google, they report earnings next week. So they will kind of have a big impact on the market, and especially on tech stocks, since they're involved in so many different industries. So everyone will be watching how they're doing, and these are really the current major driving forces. Yeah.
Good point. I'm going to read you something quickly that just came out from Andy Kessler, who I like, writes for now the Wall Street Journal, but one of my favorite tech thinkers. This goes to interest rates either. There's an area in which interest rates really do matter. Just going to your point about maybe they don't matter right now, is the federal budget deficits, unnecessarily boosted by electric vehicles. Unnecessarily boosted by electric vehicle subsidies, another green goo for definitely showing his right leaning tendencies. Perhaps the first time, interest payments this year will be larger than defense spending. Okay, this is a major point. This is one reason recent treasury auctions have seen weak demand, sending longer rates higher. Here's a silver lining: the economy might be fine, but higher rates may finally bring a day of reckoning to rein in the taxing spenders. So I think that's an interesting macro point that Kessler's making. They don't necessarily matter, but at the same time, they do matter when the numbers get this big. And remember, stocks have had a great run, meaning rates could start coming down and stocks still keep correcting because of the run that they've had as rates have climbed through 11 rate hikes. So listen, you got to follow the tape. I think, like I said, Google, Goldman, I don't think you've got a lot of strength in huge categories. Gold's what, 11 trillion. Goldman's one of the biggest financials. I think they probably report, and then Google, one of the biggest tech stocks. So I think we'll know a lot more this week after earnings report. One thing I will say is I look at Oracle, which was kind of breaking out to all-time highs. You can see how hard it is. And quickly right back into the gap. It's not healthy market behavior, right? In a strong market, that gaps and
Yeah.
goes, and you can see the go at 132, and quickly you take that go and you don't have good money management. You're down 15%. AMD, same thing.
AMD, all the leaders, Howard, they've given up all of their.
You see that go. You see that breakout and go to all-time highs. But if you didn't wait for confirmation, a couple days and just straight back. What is that down? AMD is down.
1 second.
30%.
35.
Yeah, that's not, again, not for the faint of heart. So
Yeah.
so I can see you're seeing too many of these.
Look at ARM, Howard.
Yeah, but that shouldn't be public at 60. Look at
Yeah.
Reddit, RDDT.
Yeah.
People chase that. So again, there's just
Yeah.
there's just too many
But
people
even
willing
really
to
strong
chase.
companies with some of their best earnings report, even they're just giving up.
So I'm saying, so it's not just one.
Yeah.
We had a huge number, Micron. We were talking about it on the Gap and Go. And again, I don't chase because
Here's your chance here near the 100.
correct. You're gonna have this is the chance to look at these Gap and Goes and say you make it a good bounce for an entry level, and then you can leg into a trend. So I think you'll see more of this, but at the same time, there's been some damage, and there's going to be some buyers looking this week. All right, have a
All
great
right,
week.
Howard, thank you. See you
Everybody
later.
have a great week.
Bye.